Do you want to learn how to invest in the stock market? Here are top 5 tips from billionaire investor Warren Buffett that made us millionaires by the age of 35.
Hey guys, it's Amber and Jared here. Here at Holy City Family, our goal is to empower you to achieve financial independence and provide the best education for your children so that everyone can pursue their dreams and ambitions.
If it's your first time here, thank you for joining us, and make sure to hit the subscribe button below to see our weekly videos. And we look forward to learning, saving, and growing together with you.
Oh.
This is awkward.
Tip number 1, know what you own.
So this one's about a few different things. One of them being stay in the circle of competence. Stay in your circle of competence. And this is something that's been used by Warren Buffett for years as a way to focus investors on only operating in the areas that they know best. And this is something that Amber and I have done with our investing over the last 15 years. And it served us really well. And just so you guys are aware, if you don't already know, Warren Buffett is known as a businessman and a philanthropist. Mm-hmm. He's widely considered the world's most successful investor. Wow. And I talk about him a lot in a very nerdy way. As of October 2020, his net worth was listed at $80 billion. $80 billion. He is the chairman and CEO of Berkshire Hathaway. And what we want to do next is look at the 1996 Berkshire Hathaway shareholder letter and go through that in some detail. In this letter, Warren Buffett writes, "What an investor needs is the ability to correctly evaluate selected businesses." Note that word selected. You don't have to be an expert on every company or even many. You only have to be able to evaluate companies within your circle of competence. The size of that circle is not very important. Knowing its boundaries, however, is vital.
Invest in products or services that you understand. So it's important that you ensure others actually love the products and the services. Apple is actually an example of, if you're like us and have ever owned an Android and then converted to an iPhone, you know what it means to actually love a product. Tip number 2, look for good management.
At a high level, Warren Buffett looks for the following things in management: intelligence, initiative, energy, and integrity. Let's take a look at a few different ways to analyze this in more detail. Here is Simply Wall Street's management section for Apple. Here you can see Tim Cook's tenure and compensation. There's also a CEO compensation analysis, a breakdown of the leadership team, and the board of directors. On Glassdoor.com, you can look at CEO approval ratings, pros and cons from employees, ratings by demographics, specific reviews. For any companies that you're considering investing in, go to the investor relations page on their website, like this page for Apple. You can see a lot of great information, like listen to the conference call webcast as soon as the earnings reports are available. You can look at the latest press release. You can look at the newsroom and financial data, and even the latest 10Q.
Tip number 3, find companies with economic moats.
A great resource that we found for doing this is on Morningstar.com. And what they use is called the Morningstar Economic Moat Rating. And this represents a company's sustainable competitive advantage, which is exactly what you want to look for. Mm-hmm. A company with an economic moat can fend off competition and earn high returns on capital for many years to come. Morningstar categorizes these moats as none, narrow, and large. Here is Morningstar's stock analysis for Apple. And as you can see, the moat, according to Morningstar, for Apple is narrow. And then it also has a trend below to say if that's stable or if the trend is changing. Also, get to know the competitors of the companies that you're looking at. We found that Finbox.com has a great resource for this called Performance versus Valuation Benchmarks. And what we like about this is it's just very easy to use, and it has a great user interface. Make sure you subscribe to our channel to see part 2 of our top 10 tips.
Tip number 4, understand the business cycle. So according to Investopedia, the business economic cycle is defined as
the fluctuation of the economy between periods of expansion and contraction. Factors such as the gross domestic product, GDP, interest rates, total employment, and consumer spending can help determine the stage of the economic cycle. And here are the 4 stages, as you can see in this visual: expansion, peak, contraction, and trough. So now that we've looked at the economic cycle visual, we like a resource that we found on Fidelity's site. And this one shows you at any given time, I think they do it on a quarterly basis, but it will show you where the US is on that cycle. China, you can see, is out in the front due to partly to quicker emergence from the lockdowns from the pandemic. And I like to keep an eye on this on a regular basis just to see where the opportunities are and where the different major economies are on this chart.
Tip number 5, seize great opportunities. Missing out on an investment can hurt worse than a bad investment.
Yeah.
And if you go too small, that can also be a mistake. Warren Buffett actually admitted that he lost billions of dollars for Berkshire Hathaway doing this. None of those will show up in any stock performance reports or statements.
Warren Buffett also said that you only get a handful of great opportunities in a lifetime. Mm-hmm. So all of this is to say, when you do your research and you have a great opportunity and presents itself to you, seize that moment and make sure that you invest, and you also invest the right amount at that time.
Here's a quick recap of the first 5 of our top 10 tips. Number 1, know what you own. Number 2, look for good management. Number 3, find companies with competitive moats. Number 4, understand the business cycle. Number 5, seize great opportunities.
Hey guys, if you like this video, hit the thumbs up button and reach out to us in the comments below. Also check us out on Instagram and email us anytime.
Our goal is to read every comment and respond as often as we can. So make sure to subscribe to our channel below and join us as we learn, save, and grow together.
Thank you guys.
One. Wait, Michaela.
Hey. All of our videos are for informational purposes only and do not constitute financial advice. Please do your own research and consult a certified and trusted financial planner who will put your interests above their own before following any advice we may offer.